What if you could own just 3 companies so dominant, so woven into our lives, that holding them could set you up for life? No risky startups, just a forever portfolio. Today I'll break down why these 3 stocks are my top buy and hold picks, based on brand power, market dominance, and overlooked long-term growth. First, a company that redefined travel and turned spare rooms into a global hospitality empire. Next, an icon of luxury and performance, where customers wait years for the privilege of ownership. And finally, a gaming legend whose characters and innovation have shaped generations. Let's dive into the first stock. Our first pick is Airbnb, ticker ABNB, a company that's not just changed how we travel, but has fundamentally reimagined what travel can be in the modern world. From humble beginnings as a way to rent out an air mattress, Airbnb has grown into a global powerhouse, connecting millions of travelers with unique places to stay and experiences to discover. Airbnb didn't just offer cheaper stays, it created a new way to experience places, from tree houses in Costa Rica to apartments in Tokyo. The platform opened up a world of possibilities, letting travelers immerse themselves in local neighborhoods, cultures, and lifestyles that hotels simply can't replicate. Whether you're looking for a cozy cabin in the woods or a sleek city loft, Airbnb has made it possible to live like a local, anywhere in the world. Their asset-light model is the secret. Airbnb doesn't own the properties or manage the cleaning, which means they can scale globally with minimal overhead. This approach allows them to offer an incredible variety of listings, from budget-friendly rooms to luxury villas, all without the burden of maintaining physical assets. It's a business model that's as flexible as it is powerful, enabling rapid growth and adaptability. Unlike hotel chains burdened by real estate, Airbnb can expand with code and marketing, making them nimble and resilient. Their ability to quickly launch in new markets, test new features, and respond to changing consumer preferences gives them a significant edge over traditional hospitality giants. Technology is at the heart of their operation, driving everything from search algorithms to personalized recommendations. When the pandemic hit, hotels struggled with empty buildings, but Airbnb pivoted to long-term stays and domestic travel, adapting instantly. They recognized the shift in demand as people sought safe, private spaces for remote work, family reunions, or simply a change of scenery. This agility allowed Airbnb to not only survive, but thrive during one of the most challenging periods in travel history. The network effect is their moat. More hosts attract more travelers, which attracts more hosts, a cycle that's nearly impossible for competitors to break. Every new listing adds value to the platform, making it more attractive for guests, while every new guest increases the earning potential for hosts. This virtuous cycle has helped Airbnb build a community that's both vast and deeply engaged. With listings in over 220 countries, Airbnb's global reach diversifies revenue and shields them from regional downturns. No matter where travel demand shifts, Airbnb is positioned to capture it, whether it's a surge in domestic travel or the return of international tourism. Their presence in both major cities and remote destinations gives them unmatched flexibility and resilience. Financially, Airbnb is now consistently profitable, generating strong free cash flow, a hallmark of a high-quality, mature business. Their ability to turn revenue into real, sustainable profits sets them apart from many tech companies still chasing growth at any cost. This financial strength gives them the resources to invest in new products, expand their reach, and weather economic storms. The travel industry is massive and growing, and Airbnb still only captures a fraction of it. As global mobility increases and more people seek authentic, personalized travel experiences, the opportunity for Airbnb to expand is enormous. There's still plenty of runway ahead, with untapped markets and new customer segments waiting to be served. Their expansion into experiences broadens their ecosystem and wallet share. By offering everything from cooking classes to guided tours, Airbnb is becoming a one-stop shop for travelers looking to make the most of their trips. This not only increases revenue per user, but also deepens customer loyalty, as guests return to Airbnb for more than just a place to sleep. Airbnb's brand is so strong it's become a verb, top of mind for millions, reducing marketing costs and cementing leadership. When people think of booking a unique stay, they don't just search for a rental, they Airbnb it. This kind of brand recognition is rare and incredibly valuable, creating a self-reinforcing cycle of growth and trust. Regulation is a challenge, but Airbnb has a decade of experience adapting to local rules and working with governments. They've learned to navigate complex legal landscapes, often partnering with cities to create fair, sustainable frameworks for short-term rentals. This experience gives them a head start over newer entrants and helps protect their business from sudden regulatory shocks. Their data is a goldmine, helping hosts optimize pricing and marketing, and will only become more valuable. With millions of bookings and reviews, Airbnb can offer insights that help hosts maximize occupancy and earnings, while also improving the guest experience. This data-driven approach is a key differentiator in a crowded market. The company's Moat, brand, and asset-light model make it hard to unseat. Competitors may try to replicate the platform, but Airbnb's scale, trust, and community are nearly impossible to duplicate. Their reputation for safety, reliability, and unique experiences keeps both hosts and guests coming back. Millennials and Gen Z value experiences over things, and Airbnb is perfectly positioned for this generational shift. As younger travelers prioritize adventure, authenticity, and flexibility, Airbnb's offerings align perfectly with their values. This demographic tailwind will likely fuel growth for years to come. The platform isn't just for vacations, it's for business travel, renovations, digital nomads, and more, making revenue streams more stable. As remote work becomes more common, Airbnb is capturing new types of demand, from extended stays to temporary relocations. This diversification helps smooth out seasonal fluctuations and economic cycles. Their strong balance sheet gives them flexibility to weather storms and invest in growth. With ample cash reserves and prudent financial management, Airbnb can seize new opportunities, acquire promising startups, or double down on innovation when others are forced to pull back. Founder Brian Chesky's leadership and long-term vision are major assets. His commitment to innovation, community, and responsible growth has guided Airbnb through both booms and crises, ensuring the company stays true to its mission while adapting to a changing world. Risks exist, recessions and competition, but Airbnb's unique value proposition and experience focus set it apart. While economic downturns can impact travel, Airbnb's flexible model and broad appeal help cushion the blow. And as more travelers seek out meaningful, personalized experiences, Airbnb's lead only grows. The experiences business could be a future growth engine, creating a sticky ecosystem for travelers. By integrating activities, tours, and local adventures, Airbnb is building a platform that keeps guests engaged before, during, and after their trips. The company is valued at roughly $78.6 billion, with a price-to-earnings ratio of about 30.57 and earnings per share of $4.20. In 2024, Airbnb generated $11.1 billion in revenue and delivered net income of $2.64 billion, reflecting strong operating leverage as it continues monetizing its global marketplace. In summary, Airbnb is the undisputed leader in a growing market, with a powerful network effect, iconic brand, and robust financials. Their ability to innovate, adapt, and scale sets them apart as a true disruptor in the travel industry. It's not just a travel company, it's a technology platform redefining an industry. Airbnb's impact goes beyond hospitality, influencing how people live, work, and connect around the globe. As they scale and expand, the path for long-term value creation is clear. With each new market, product, and partnership, Airbnb cements its role as a cornerstone of the future of travel. For a forever portfolio, Airbnb is a cornerstone. Its combination of growth, resilience, and innovation makes it a compelling choice for long-term investors seeking exposure to the future of travel and technology. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Our second stock is Ferrari, ticker RACE, a luxury brand that just happens to sell cars. When you think of Ferrari, you don't just picture a car, you imagine a symbol of status, performance, and aspiration. Ferrari is not just an automaker, it's a cultural icon, a name that evokes passion and exclusivity in every corner of the globe. Unlike typical automakers, Ferrari thrives on manufactured scarcity, producing fewer cars than demand to maintain exclusivity. Each year, Ferrari deliberately limits production, ensuring that owning one remains a rare privilege. This strategy isn't just about limiting supply, it's about cultivating desire, making every Ferrari feel like a coveted work of art. To buy a new Ferrari, money isn't enough. You need history with the brand, fueling loyalty and desire. Prospective buyers often have to prove their dedication, sometimes by owning previous models or participating in Ferrari events. This approach transforms customers into lifelong brand ambassadors, deepening their emotional connection to Ferrari. This scarcity gives Ferrari unmatched pricing power and profit margins more like Hermès than Ford. While most car companies compete on price and volume, Ferrari stands apart, commanding premium prices and enjoying margins that rival the world's top luxury brands. Their customer base, ultra-high net worth individuals, keeps revenue resilient even in downturns. These are buyers who aren't swayed by economic cycles. For them, a Ferrari is both a status symbol and a collectible asset, making the brand's revenue streams remarkably stable. The Ferrari brand is a global icon. extending beyond cars to merchandise and even theme parks, diversifying income. From high-end apparel and accessories to immersive experiences at Ferrari World, the brand's reach goes far beyond the road, tapping into multiple revenue streams and strengthening its global presence. Formula One is Ferrari's soul, reinforcing its racing heritage and keeping the brand in front of millions. Every race is a showcase of Ferrari's engineering prowess and competitive spirit, fueling the legend and keeping the brand top of mind for fans and collectors alike. The shift to electric vehicles is an opportunity, not a threat. Ferrari will position its EVs as the pinnacle of performance and exclusivity. As the world moves toward electrification, Ferrari's commitment to innovation ensures its future models will deliver the same thrill and prestige, blending cutting-edge technology with timeless allure. Financials are stellar: steady growth, high margins, low debt, and a multi-year order book for revenue visibility. Ferrari's disciplined approach to business means it consistently outperforms industry peers, with a backlog of orders that stretches years into the future, providing rare predictability in the automotive world. Ferrari's focus is value, not volume, expanding with models like the 𝗗𝗟𝗧, their first four-door, while maintaining scarcity. This bold move opens new markets and customer segments, but Ferrari remains committed to its core principle: exclusivity above all. Classic Ferraris appreciate in value, reinforcing the brand's investment appeal. Unlike most cars, which depreciate, many Ferraris become more valuable over time, making them prized assets for collectors and further cementing the brand's legendary status. Owning Ferrari stock means owning a piece of a legacy and one of the world's most powerful luxury brands. It's not just an investment in a company, it's a stake in a story that spans decades, filled with innovation, triumph, and enduring prestige. Management's long-term mindset protects the brand for future generations. Every decision is made with an eye on legacy, ensuring that Ferrari's mystique and value endure for decades to come. Barriers to entry are immense. No new company can replicate Ferrari's century of heritage and prestige. The brand's history, racing pedigree, and global recognition are impossible to duplicate, creating a moat that's nearly unbreachable. The company carries a market cap of about $65.09 billion, trades at a price-to-earnings ratio near 34.96, and posts earnings per share of $10.50. In 2024, Ferrari produced $6.67 billion in revenue and $1.52 billion in net income, reinforcing why investors often view it as a premium brand with premium margins. Valuing Ferrari as a luxury goods company, not a car maker, reveals its true worth. Its business model, customer loyalty, and brand equity put it in the same league as the world's most exclusive luxury houses. Year after year, Ferrari delivers consistent growth while preserving exclusivity. The company's ability to innovate without diluting its brand is a testament to its disciplined strategy and visionary leadership. In conclusion, Ferrari's strategic scarcity, pricing power, resilient customer base, and clear growth path make it a unique asset. It's a rare blend of tradition and innovation, with a business model that's as robust as it is refined. It's insulated from industry pressures and built for stability and growth. Ferrari's approach ensures it can weather economic storms and emerge even stronger, making it a cornerstone for any long-term portfolio. For a forever portfolio, Ferrari is a perfect fit. It's more than a stock. It's a symbol of enduring value, timeless appeal, and unassailable brand power. Now, let's turn to our final pick, the King of Fun. Our third forever stock is Nintendo, ticker NTDOY, a company that's truly mastered the business of fun and imagination. For over a century, Nintendo has been synonymous with play, creativity, and innovation, evolving from a humble playing card company in Kyoto to a global entertainment titan. Today, Nintendo stands as a beacon of joy for millions, shaping childhoods and family memories across generations. Nintendo's value lies in its legendary intellectual property, Mario, Zelda, Pokémon, and more. Global icons that generate revenue for decades. These characters aren't just mascots, they're cultural touchstones, instantly recognizable and beloved worldwide. Each new game, movie, or product featuring these icons is met with anticipation and excitement, fueling a cycle of engagement that few companies can match. Unlike Sony and Microsoft, Nintendo innovates with gameplay, not specs. Think Wii, DS, and the hybrid Switch. Nintendo's genius lies in reimagining how we play, not just what we play. The Wii brought motion controls to the masses, the DS made dual screens and touch gaming mainstream, and the Switch blurred the lines between home and portable gaming. This focus on unique experiences, rather than raw power, has set Nintendo apart and created entirely new markets. By controlling both hardware and software, Nintendo captures profits across the ecosystem, making their model highly lucrative. This vertical integration means Nintendo can ensure quality, optimize user experience, and keep a larger share of every dollar spent within its universe. It's a strategy that has allowed them to weather industry shifts and maintain strong margins, even as competitors chase the latest tech trends. The Switch has sold over 140 million units, making it one of the best-selling consoles of all time, and the upcoming Switch 2 is poised to be a major catalyst, with a built-in upgrade market of loyal fans eager for the next evolution. Nintendo's ability to create hardware that appeals to both casual and dedicated gamers ensures that each new console launch is a global event, driving hardware, software, and accessory sales in tandem. Nintendo's fanbase is uniquely loyal, following the brand from one generation to the next. Parents who grew up with Mario now introduce their children to the same adventures, creating a powerful cycle of nostalgia and discovery. This multi-generational appeal is rare in entertainment and gives Nintendo a built-in audience for every new release. But Nintendo's story is now bigger than consoles. The Mario movie grossed over $1.3 billion, and theme parks like Super Nintendo World are drawing huge crowds. These ventures extend Nintendo's reach far beyond gaming, turning its worlds into real-life destinations and blockbuster films. The company is building an entertainment empire that rivals the likes of Disney, with its characters and stories leaping off the screen and into everyday life. This Disneyfication is just beginning, creating new high-margin revenue streams and strengthening the core gaming business. Theme parks, movies, and merchandise not only generate profits on their own, but also deepen fans' emotional connection to Nintendo's worlds, making them more likely to buy games, consoles, and collectibles. Every movie, park, or merchandise sale feeds back into game sales, a self-reinforcing flywheel. The more people engage with Nintendo outside of gaming, the more likely they are to return to its games, and vice versa. This synergy multiplies the value of each IP and keeps Nintendo's brand top of mind year-round. Financially, Nintendo is a fortress, billions in cash, virtually no debt, and flexibility to invest or return capital to shareholders. This strong balance sheet gives Nintendo the freedom to experiment, weather downturns, and seize new opportunities without the pressure of heavy borrowing or short-term thinking. Their careful craftsmanship ensures every major release is a cultural event, protecting IP value. Nintendo is famous for its attention to detail and willingness to delay games until they meet its high standards, a philosophy that has built trust with fans and critics alike. When a new Zelda or Mario launches, it's not just a game, it's a global moment. Digital sales and subscriptions are growing, providing stable, recurring revenue with higher margins. Services like Nintendo Switch Online and the eShop have transformed how Nintendo monetizes its content, reducing reliance on physical sales and opening up new ways to engage players year-round. The global gaming market is expanding, and Nintendo's family-friendly appeal brings in new generations of fans. As gaming becomes more mainstream and accessible, Nintendo's approachable style and inclusive design philosophy make it the go-to choice for families, kids, and newcomers worldwide. Their games are evergreen. Titles like Mario Kart 8 Deluxe sell for years, not months. Nintendo's first-party games rarely see deep discounts, maintaining their value and continuing to sell long after launch. This evergreen effect is a testament to the timelessness and replayability of Nintendo's creations. Mobile gaming is a gateway, introducing IP to new audiences and funneling them to consoles. Games like Pokémon Go and Mario Kart Tour reach millions who may never have owned a Nintendo system, expanding the brand's reach and creating new fans who may eventually invest in the full Nintendo experience. Nintendo often trades at a discount due to perceived cyclicality, but its cash pile and IP portfolio make it a bargain. Investors sometimes worry about the boom and bust cycle of console launches, but Nintendo's diversified revenue streams and fortress balance sheet provide resilience and upside. Buying Nintendo stock means owning a world-class IP library, a unique hardware-software strategy, and massive new growth avenues. It's a rare opportunity to invest in a company that combines creative magic with business discipline, and whose best days may still be ahead. The next console cycle is a catalyst, but the long-term story is the expansion of the Nintendo universe, movies, parks, and more. As Nintendo continues to build new worlds and experiences, its influence will only grow, reaching new audiences and deepening its cultural impact. Risks exist, console flops, or movie misfires, but Nintendo's track record and adaptability inspire confidence. The company has weathered downturns before, always bouncing back with fresh ideas and beloved franchises. Its ability to pivot and reinvent itself is a key reason for its enduring success. The market values Nintendo at approximately $87.45 billion, with a price-to-earnings ratio around 36.29 and earnings per share of 51 cents. In 2024, Nintendo generated 1.16 trillion Japanese yen in revenue and delivered 278.8 billion Japanese yen in net income, highlighting the company's ability to convert franchise-driven demand into meaningful bottom-line results. In summary, Nintendo is an entertainment powerhouse with timeless IP, a fortress balance sheet, and a multi-pronged monetization strategy. It's a company that has proven it can adapt, innovate, and thrive in a rapidly changing industry, all while spreading joy to millions. It's a stock for anyone who wants to own a piece of the business of joy. With every new game, movie, or theme park, Nintendo continues to prove that fun is a timeless investment. Let's wrap up with your forever portfolio. There you have it. Airbnb, Ferrari, and Nintendo, three companies with powerful brands, wide moats, and clear paths for long-term growth. Building a portfolio with businesses like these is how you create real generational wealth. Which of these three would you pick to hold for the next 20 years? Let me know in the comments. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Link is in the description. Don't forget to like, subscribe, and join our community for more deep dives and exclusive analysis. Thanks for watching, and I'll see you in the next one.